Okay, it's the 17th of Jan. We've got just over 30 minutes to the NY Open. We'll get to the charts in a second. Let's just check sound. Yeah, good. All right. All right. It's another day, Friday. Um, got about 30 minutes, just over 30 minutes to the NY Open. Let's take a look at the daily chart. Before we do so, let's take a quick look at the news calendar. There isn't anything today. There's nothing today. There's no news at all. So we can start looking at setups from starting from the NY Open after the first 15-minute candle closes after the NY Open. Right. But I said this yesterday. Today is the last day of the week. Don't try to force any trades. Also, it's it might be a low volume day because there is no news, and also because of what's happening on Monday. So Monday, 12 noon EST is the Trump inauguration. Uh, that's probably when, since next week is when it's going to be a busy week in terms of volume. Volume might kick in Asian session on Monday, right? That's a possibility. So keep for those who are watching charts at that time, keep an eye out of volume. Keep an eye on volume kicking in around the Asian session on Monday. But today might be a slow day. Let's look at the daily chart. Daily candle has closed above 2700, right? We've anticipating this move right from the beginning of the week. It's taken time, but we've got there eventually. It's been very slow. So we've got to yeah, how much was it? Yeah, we're just making 300 pip candles, right? And for gold, a 300 pip candle is the bottom of the daily range, right? It's right at the bottom because gold usually for gold to trade a healthy average daily range on gold is about 350 pips, 350, sometimes even above 350. So if you're doing about two, how big was this candle? This was 180 pips, right? So that's nothing. And was this yeah, that was 200. So if you're doing 270, 280, 250 pips, then it's not great for gold, right? It's not a great time to trade gold. But eventually we did get to 2715. So on a macro level, that was the plan. And we've come back to this 2715, exactly to where price has tested it several times in the past. This was the original supply zone. I said all of this yesterday as well, and the days before that. So this is the original supply zone, the drop, and you can call this a base, and then the drop, and then this is the reaction to that source, and this is also reaction to it, and now we've come for a third reaction to it. Okay, so let's go down to the let's go to our trading chart and look at our zones. But before we do that, I always do a recap because I give out I either take a trade myself or I give out ideas for what to look for after the stream is over. So I give out ideas for after the stream is over, so maybe like an hour and a half, 2 hours, or even up to 2.5 hours, what to look for in terms of the pair, what can possibly happen, and also I give setups out, right? I give setups away, so which means I give out the where how what you should look for to enter the trade, where you would place your stop loss, and where your TP levels would be. And I do this every day, right? So I come back the next day. The whole thing is I come back the next day and I see how was I right or was I wrong, and if I was right, how good the prediction was, right? And it's done so that you guys can make money out on this by taking those trades. With confidence, take those trades, and then learn to predict price yourself, because I I don't just predict price. I I share information on why I make that kind of prediction, right? Okay, so sorry, hold on. Okay, so I gave out um, two sell ideas yesterday and one buy idea, right? And I said if an M30 candle closes in inside above around 2720.46, around that area, if it touches and gets above, and if the M30 candle closes, then look to take sells, and your TP would be the EMS, because that's the area of liquidity. Also 2715, that's weekly support now. You could take that's a weekly SR level 2715. You can take partial positions there, and at the EMS, right? That was the idea. And then the second idea was if wait for a 30-minute resistance to form. It was just like the first idea, and then wait for a 15-minute candle maybe to close, below either the weekly SR level or somewhere below this zone, right? But it's the first idea that worked, right? The first idea, so we price went up, went above 2720.46. I had given this level yesterday. It just went above that, and there's M30 resistance form there. So soon as M30 resistance forms, then you can draw the fib, and this is the way you would draw the fib. It's the previous two M15 high break. So this candle broke this high, this candle broke this side, the two most recent M15 high breaks, and this broke this side, this broke this side. So you draw the fib, and then price came very close, because this candle was the close of the M30 candle, this one right here. So price came very close. You could have just taken a trade there. Stop loss just above the M30 resistance candle, which is 2724.76. A safer stop loss would have been above the liquidity candle, above 2726, or a more aggressive stop loss would be above 2724.75, right? And then that trade would have had, let's say, for example, if you took your stop loss here, it's about a 30 pip stop loss, and we drop straight to the EMAs. As soon as you touch the EMA, you probably need to get out. That's about 113 pips trade. And if you did place your stop loss above this, that's a 16 pip stop, 15, 16 pip stop loss, and again about 120, 130 pip trade, right? Sorry, 115 pip trade. So that's very high RR on both if you did either of those scenarios. So that was the one that worked. And I said for buys, I said price needs to come down, and it never came down. So the buy scenario, it never happened. But I was predicting sells. I said sells are the way to go, because we are inside a liquidity candle, and that's exactly what happened, right? So now let's get rid of all of these. Okay. Okay, let's start with supply. We've got a supply zone right here. A rally, four basin candles, 1, 2, 3, 4, four basin candles, and a drop. Let's mark that zone out. Don't worry about this zone. We'll sort that out later. Better yet, let's do this, because the zone hasn't been broken yet. So let's just extend this here, right? Because those two zones are overlapping each other anyway. So the zone to your left hasn't been broken yet. Price has come deep into it, but hasn't broken yet. So I'm going to keep that zone, which is that zone right there. But we have a new supply zone right here. So let's incorporate that now. And then the close of this is 276, 276. Okay, so this is the closest supply level, right? We're going to ignore this liquidity candle for now, and we're going to because prices come deep into this liquidity candle, right? In fact, what I want to do is, this was the original liquidity candle on the 15-minute. Let's, yeah, let's bring it up there, right? Low, 1775, 1775. Okay, we had spoken about that yesterday. So prices come deep into it. That's a 83 pip, 85, 84 pip candle. We've come 71 pip. So we've crossed the 50% mark, right? The liquidity on that candle should be done. So we're going to take a look at that area again when we do start to identify liquidity candles. Okay, in terms of demand, we have a zone here, a 1 hour zone here. That is why I've drawn it the way it is. Yeah, and price didn't come there yet, so we're going to just extend this to the right. Price did not come down to these levels yesterday. It did not even touch the liquidity candle. So it might do so today. I'm going to mark that out. We're going to extend that to the right. Move these labels to the right. Move this to the right as well. Extend this to the right, I mean. Extend that to the right. Covered about 300 pips to the downside. I think we're good. Yeah, I don't think price is going to come that much down, but let's just extend this to the right anyway for next week. Yeah, okay. Okay, cool. Now, we have a new supply zone. That's the only thing that we have in terms of new. Okay, let's extend these to the right as well. And this one also is all from yesterday. I'm not going to redraw them now. Okay. Yeah, 380 pips to the upside. Yeah, I think we're good here. Okay, so the only new zone that we have is this supply zone here. Everything else is from yesterday. Price hardly moved yesterday. It just, I mean, in the New York session, we just moved up here and we came down up to here. That's all that happened, right? Nothing really, nothing apart from that. It's likely that we're dropping. We're coming down back to 2700, maybe to get a push up again. We'll take a look at that later. Let's look at the, let's look, check if this is to see, the next step is to see if this is a high liquidity candle or not, right? Has this zone taken out anything on the left? This zone up here, yes, it has. So this zone has taken out this because this is this is a reaction to this zone. This is still the same zone. We haven't broken through it. So this is still the original zone. This has taken out something to the left, but price has come deep into it, right? Since price has come deep into it, that original high liquidity zone now I don't consider high liquidity zone anymore, the original zone. But we're going to take at this area, supply, and see if this took out any H4, H1 demand to the left. Price came down, nothing really. Didn't take out this. If price had come down and taken out this, then I would consider this a high liquidity zone. So it's not a high liquidity zone, right? because price hasn't taken out this. But you can still get a reaction from the zone. It's been a long week. Oh, it's been a long week. Okay, so yeah, so the zone is about 134 pip zone. That's fine. And this fresh supply, so this rally base drop didn't take out anything here. Let's look at the 30-minute again, just to take a closer view. Well, yeah, it did. It did. There is there is demand there. There are these wicks there that price came and took out. So this is now this push down has created has made this a high liquidity zone. This push down. So price came down, took out these wicks. There is a demand there. That's why price is rejecting and pushing up. And it's also closed below 2715, which is a weekly SR level. So this is a high liquidity zone. So we're going to bring that label down there to that. Extend this here. Just save this. Okay, the zone above, if price does come there, that's 270 pips away. If price comes there, this is also a high liquidity zone. Let me just select that so it's more visible. For yeah, so this obviously is a high liquidity zone. Price hasn't come there yet. It's a fresh zone. It pushed below all of this demand here on the left, right? Price broke through all of these demand zones. There's a demand zone here, 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 even here, even here, or so many. This is a fresh zone that price can come to. So let's call that a high liquidity zone as well. Okay. All right. Cool. Now, okay, let's just clean up the chart a bit. We're going to take a look at the high liquidity candle next. Okay, so we've drawn the zones. We've seen which ones are high liquidity zones and which ones are not. And the next step is to take a look at to see in here. We already have a high liquidity candle here. We're going to take a look at this again. I think we did this yesterday. Yeah, we did. So that is the high liquidity candle right there, and it's right at 2700. It's basically this candle, but this candle is the largest candle in the range, and it has tapped 2700. So that is why I have it drawn like this. Okay. And it's fresh because price hasn't come there. It hasn't touched. It came close to 2700 yesterday, but we haven't tapped the candle yet, right? So we're going to keep an eye on that zone. That is a 65 pip zone. It's a good zone. Now let's get rid of this, okay? Because the liquidity in that of that candle, that 15-minute candle that we had drawn yesterday, is taken out. Price has gone deep into it. Sorry. Okay. Start with the 1 hour. If price comes here, what's the largest candle? Obviously this one, right? And that candle touches the weekly SR level, which is great. That's an 85 pip candle. Let's just draw that candle out there. Let's go down to the 30-minute and see what it looks like. On the 30-minute, it's this candle right here, 54 pip candle, above these highs. Yeah, that's better. That's better. Let's look at the 15-minute. Okay, it's not on the 15 because that candle has no top wick. And also we've got a big 15-minute candle here, 64 pips. Hmm, 56, 63. Might need to do this on the 1 hour. Okay, here's what I'm going to do. Let's do it on the 1 hour, and I'll put a price line where the M30 is, just like we did yesterday for the, like I did a couple of days ago for that, for this zone right here. 321480, 321480. Okay, that's the liquidity candle, but I'm going to put a price point here under this candle right here, the low of this candle, 780. And the reason that I'm doing that is I'm taking the full candle because that is the largest candle. That candle is bigger than this, this bearish candle. But when you go down to the 30-minute, these candles start getting bigger than that candle, right? So I don't want to. Also, that's one reason. The second reason is, if price comes and reacts at 2715, I don't want to kind of miss it. I don't want to not notice it. Now that I have it drawn on the 1 hour candle, if it comes and reacts here, I know that it's also, there's 2715 weekly resistance there, but there's also high liquidity candle on the 1 hour, right? I hope that makes sense, so that I don't miss it visually. I don't miss uh, the picture of what's happening. But I have it drawn here because I'm anticipating price to come all the way up there, 2717.80, maybe then, and then make a turn. Let's see. We still need to gather more information on the chart and see what's happening. Okay, so the EMAs are kind of flatlining at the moment. So this shows us that price is ranging. If you look on the 4-hour, that's exactly what's happening. We are just ranging, right? So since yesterday NY session, we are just ranging, right? That's just a range, and then it's dropped a bit, but it came back very quickly back to that range. So price created a range, left the range, and now it's come back to that range, right? So are we going to come back here? Are we going to continue to range just like we did here? Are we going to continue to range for another 4 hours or even longer until the end of the day? Or are we going to get a reaction here and push down, right? Because buys are going to be, buys are going to be from down from where 2700 is. It's not going to buy there, right? You can't buy there because you've got um, you got these barriers. You got 2715, which is weekly SR, and you've got a liquidity candle right in front of you. So you can't buy into them. Obviously, you're going to get a price is going to react to them and probably going to take you out. Right? It's like trying to start your car, 5 feet away from a wall, and you're going to drive into that wall, obviously. So you don't want to do that. So if you want to take buys, you want to wait for price to pull back down, look for a setup somewhere here to buy to go up. It may not happen today, right? Because there, as I said yesterday, if you watched what happened yesterday, go down to the 50-minute time frame. I'll show you. Even though it was a news day. I think this was the news candle right here, right? It's just a 50 pip candle, 52 pip candle, right? And we just ranged. Look at that. It's just flatlining. That's all a range. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, right? Even 12, right? So what? 15. That's 180 minutes. 3 hours of just ranging. Price just ranged for 3 hours. Didn't do anything. And then later on in the NY session, the latter half of the NY session, almost around the London close. After the London close is when there was a sell opportunity, but I don't trade those hours. But it was really ugly yesterday, right? There's absolutely no volume. When you have really small candles like this, 15-minute candles that are like 20, 30, 40 pips on gold, that means there is no volume on the pair. And it's best when you have a situation like this. So right here, as soon as uh, the news candle closed, retail sales news candle closed, and I saw a 50 pip candle, I said, listen, there's not going to be volume for the rest of the session. It's best to call it a day. It's best to call it a day and not take any trades. So we're going to see what will happen today. Is there we'll have some sort of indication, like with the NY open, if you see a big candle soon after the NY open, let's say for example, the NY open 15-minute candle or the candle after that, if you or maybe even the candle after that candle, the first three candles, within those first three candles, if you have a very large 15-minute candle, that's an indication that there is volume present in the session, right? That's an indication. It's just a sign. There's no guarantee of it, but there is a indication that there is volume in the first, out of the first three 15-minute candles, right? Or the first two. If you see one of the three to be a large candle, then there's an indication that the NY session open has some volume. So then there is a possibility that you might get a sell trade coming down. Now, keep in mind it's the weekly candle close. So let's take a look at the weekly candle. What have you done? So we had a previous week was a strong bullish candle that closed above all of these resistance levels here and closed above 2763 weekly support. And now we're testing, the weekly is testing previous weekly resistance, right? 2715. Now the question is, are we going to close above it or are we going to close below it? We might reject um, the first hour or first couple of hours, pull back, and then we might um, go further up and close above. That's likely, right? Let me repeat what I just said. Because, and I'm not guessing, well, I'm taking a calculated guess of what might happen. Because of what's going to happen on Monday, because it's the inauguration and that's around 12 noon NY time, EST, it's likely that price is going to go bearish next week, right? Likely. Or we might head bullish. I don't know. We don't know the direction for sure. But there might be volume. So we might have a close above 2715 today if price is to go bearish next week, right? We might have a close above 2715 and then you might have your pullback or a reversal because that's a key area. 2715 is an important area, right? Now, to have a close above 2715, we've got about 8 to 9 hours of trading left. I'm just working backwards, okay? I'm reverse engineering the idea that I have, just okay. So because of what's going to happen on Monday, and we might have a lot of volume coming in next week, probably on Monday and on Monday, Tuesday, Wednesday, um, and it might be sells, it might be good for the dollar, and it might be sells, it might be price moving down, then it's likely that we might close above 2715 today. The weekly candle might close above 2715 today, right? Either for a pullback next week or a reversal. We don't know which one. For that to happen, for price to close above 27, we're already there. We're already above. We're just like 30 pips away from 2715, 30, 40 pips away from 2715, right? But we have about 8 to 9 hours of trading left. So obviously, price is not going to take 8 hours or 9 hours to cover 30 pips. Okay, does that make sense? So we might have a pullback first, and then later on, price might go up to close above. This is just an assumption, but it's a calculated assumption, right? So there's a chance that I could be completely off and wrong. There's a chance that it could be right. Right? I just followed a trail of logic. Because we are bullish, so we might have a pullback and then we might have a continuation up. That's basically all I'm saying. We might have a pullback now and then a continuation later on. Let's go back to the daily. Yeah, so we are tapping this area for the third time, and we are 40 pips away from 2715. Okay, so let's see if price gets up here. If price gets up here, sorry, what happened to my sound? If price gets up here, I'll be interested in sells. I'll be interested in sells because um, we we were creating. Look at the 30-minute time frame. Look at what we did. We created higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, lower highs, lower lows, right? And now we started making lower lows, right? So a lower high than that higher high, a lower low, a lower high, a lower low. So let's see if we're going to get a reaction here. I would be interested in taking sells for the first hour, hour and a half of the New York session. I would be interested in taking sells. But price needs to get here, okay? Because my TP areas would be somewhere down. I will have very conservative TPs today because knowing that there is not much volume in the market, it makes no sense to have a runner. It makes no sense to have extended TPs of 3, 4, 5, 6 RR or 10 RR. That makes no sense. You want to have, if I do get in on a trade here, I would have a very conservative TP, right? So, but I want to see how price gets there. So let's wait. There's a lot of time. We're gonna wait. We are not price is ranging right now. So which means it's not trending, right? We are in a range right now. You can see the EMA is a flatlining, and on the 4 we are closing candles side by side, just next to each other. This one came down and closed. This one is going straight back up, right? So even on the 1 hour, let's look at the 1 hour. You can see this is all candles side by side, right? So the last um, since the NY session yesterday, price has been ranging. So we're not in an uptrend, nor are we in a downtrend. Okay, this is price is flatlining. It's in a range. So we would need to see how candles close uh, to have a little bit more confirmation because we're ranging. So for example, I might, not saying for sure, but I might want to see M30 candles close rather than M15 candles close, right? When price is trending, you can wait for a pullback and take a trade when M15 support forms. But when we're ranging, it might just be better to wait for an M30 candle to close in your direction and then take the trade on the retest to come down, right? So for example, if price gets here, wait for maybe M30 resistance to form, either to touch this area somewhere here or maybe even a close below 2715, and then a retest to come down. Or if you come down here, again, wait for maybe M30 support to form to take a trade to go up, right? Because we're ranging. We just need a little bit more confirmation. And also keep in mind, just like yesterday, if you do getting on a sell trade, it might take a long time for your TP to hit. Just keep that in mind because the market's very slow. So I said this yesterday. We're going to try to use this session as an education session. Have the zones. You have any questions, ask me in the chat, and I'll be happy to answer. Trading related, technical analysis related questions. Yeah, so I'm not interested in selling or buying anywhere here, right? In this void. You want to call it a void, this black area where I have no zones, call that a void or whatever. In that area, I'm not interested in selling or buying. I want to sell or buy at the extremes. Sorry about that. I want to sell, I try my best to sell or buy at the extremes. Extremes are where the zones are. Because if I do that, that's where I would get a low risk trade, a higher probability trade, and because of that, automatically a high reward trade. Because my risk is low and the probability of the trade working is higher, the reward, potential reward also will be more because there's a bigger drop or bigger rally from here, right? So I don't like, sometimes very rarely do I take a trade, from, if I see a setup, if I see my M15 fib model, I call it a M15 entry fib model, right? If I see that model form, you've seen me take that fib model, dozens and dozens of times on the streams. So there is no rocket science to it. It's very easy to learn. If I see that form, sometimes in the middle I'll take it, but it's very rare that I do that, right? So ideally I wait at the zone. Like yesterday, I waited here until the session. I think the session ended somewhere here, I think, and there was nothing. So I just shut the stream and I closed the charts and left. And I said later on it might happen in the next 2 3 hours, and exactly that's what happened. We had a 30-minute candle close above that. I'd given a level, a price level above it. M30 resistance was formed, and price came down. Right. So something similar might happen. Volume might come in later on around the London close, uh, NYSE open or London close, right? So we just have to be patient. Oh, we're heading higher. We're heading higher. There's a very high probability that we're heading higher. This is just either to grab liquidity or create a lower wick, come down, but we're heading higher because let's just look at the 1 hour, 30-minute, 15-minute. This is a liquidity grab. This candle is interesting. London open candle. Very interesting candle. If we don't break this London open candle here, this candle high, that's a liquidity grab from 2715. If we don't break that high, then we might not come up. Might just continue down. Let's take a look at what's happened for the day, Asian and London. Let's do that now. The market opened here. 30 Asian high. Asian high. So London high. $473. Two double eight. Yeah. Okay. So this is a story. Asian session. Okay. So price opened here. Where was it? Yeah, here. This candle right here. Price opened here. Let me zoom in. Yeah. We opened here. We came up. We came into again into that supply zone that we had drawn, that I had drawn from yesterday. Price did come into that again. Dropped, created the Asian low, came back into it, couldn't go higher, tried to go higher, couldn't because there was no volume in the Asian session, and it dropped. Right, so we in the Asian session we moved about 74 pips, and we dropped back to the Asian low. Uh, Came back, retested that candle that we've just drawn on the 1 hour. This is the liquidity candle, right? So keep in mind this is the candle. If you go to the 15-minute, price came back, touched that, right? Almost touched it, which is, yeah, came back, almost touched it, created the London high, dropped to the Asian low, rejected the Asian low, went back up, tried to come back here to this high, couldn't, closed below the Asian low, and dropped down and created the London low, right? That's what's happened so far. So right now, price is in between the London high and the London low, right in the middle, right? So right in the middle, it's got 60 pips to the upside, about 60 pips to the downside, right? Right in the middle. So there's nothing, literally nothing to do right now. This is just a range, okay? The London session moved price about 115 pips, Asian session about 74 pips. Okay, so let's say 170 and then 100 pips, 110 pips. So not much of a movement. It's just done about 145 pips a day, 145 pips today, right? So not much of movement at all on gold today, which was anticipated. Now, let's see if price is going to come down, grab liquidity and go higher, or has it already grabbed enough liquidity with that London candle? This is a very important candle right here. It's a very, very important candle. This is the London open candle. We touched the liquidity candle and we dropped, right? So if it has, that's a liquidity grab, that wick. So if price has grabbed enough liquidity, is that enough to drive price down? Okay. If it is enough to drive price down, then you're not going to see price come back up there today again, right? If it's enough to drive price down, so then we might get a. I mean, when I say today, I mean the first 2 hours. Sorry, I mean the first 2 hours, first 2.5, 2 to 2.5 hours, because that's my trading day, right? Later on in the next, I mean, 4 hours from now, 4 or 5 hours from now, price might come up there. I don't know. But for the first couple of hours, if price has already grabbed enough liquidity here, uh, and it drops, that means it's not coming back here for the next 2.5, 3 hours. But it might do so later on, much later on, right around the London close. We'll have to wait and see. And if it does that, if it's planning to do it around London close, then that means we'll have a buy setup form around here to take a trade going all the way up there. Okay, so but if it hasn't grabbed enough liquidity to make the move down, then it's gonna come back. It's gonna come back, and then it'll break the high and go higher. Once it breaks this high, it's going to break this high, because this high here, this M15 candle, has no top wick. So once it breaks the London high, it's going to go to the Asian high, right? It's going to break this high and it's going to go here. And then we got to see around this area, are we going to get resistance, M30 resistance form, to take a trade to come down. All right, so those are the scenarios that I'm visualizing. I'll be back in a second. I just need to clear my throat. What's happening? Why is my Okay, I think that's good. Yeah, sorry about that. Okay, so just to recap what I was saying, um, this is a very important candle because that's a London open candle, right? We've grabbed liquidity from this 1 hour liquidity candle, and we're pushing down. So if it has grabbed enough liquidity, then it doesn't need to come back up there again to grab liquidity again, right? Then it's going to continue the way down. It's going to continue the move down, and maybe then we'll get a reaction here for price to come back up later on, right? But that's going to take time. That might take a time. If it hasn't grabbed enough liquidity, so that is the first scenario that I'm visualizing, the first scenario. So which means you're going to see bearish candles close, price comes down here without going back up. We continue down, and then we form later on. It might take a long time, but we form M30 support, and then price probably goes up again. Okay, and I don't know if it's going to go back all the way up there or if it just comes here and the day ends, right? Um, if it hasn't grabbed enough liquidity, then price will come back up to the London high again and go beyond it, right? Because above the London high is liquidity, Asian session liquidity, just above the London high, right? So it'll either grab the Asian session liquidity or even go higher above the Asian session to grab the yesterday's NY session liquidity, right? And then come down. Two scenarios, okay? Two scenarios. So we're going to wait to see which of them play out. And now that I've visualized it, I know what uh, I want to see. If that happens, then I can do something about that with that information. I can probably take a trade, right? But that's what I I want to see one of those two scenarios play out. Did we form resistance? Let's see. I want to see if this candle closes M30 resistance. If it does, it's a sign that that liquidity might be enough for price to push down. But we have to wait 7 minutes for M30 resistance to form. I'm not going to do anything now because all we've done is we've formed M15 resistance, and that's not enough. As I said, price is ranging. We're in a range right now, so it's always better to have a higher time frame confirmation than to take off to go off on the M15, M15 information. Let's see what how the M30 candle closes. You got about 6 minutes left. If M30 resistance forms here, if M30 resistance forms somewhere here, before it breaks that high, then that liquidity might be enough for price to push down. But if it doesn't, then it's very likely that London high is going to get taken out. Very likely. And we're probably going to grab liquidity from the Asian session, this is the Asian session liquidity bit. And then above that is yesterday's New York session liquidity. Right. So there are pockets of liquidity that you need to begin to identify on charts. Once you start seeing these, it's trading gets a little bit less complicated. 5 minutes more. Let's see. If M30 resistance forms here, I might take a trade, stop loss above the London high, and take a trade to come down. I might give this a chance if we form M30 resistance. Okay. But I want to see M30 resistance form, because that might be it's not a great idea, but seeing that the market is slow, we might continue to just inch our way down if we form M30 resistance here. So basically fresh M30 resistance. Even if we break the high here, get in here. Yeah, stop loss would have to be above that candle. It's about a 50 pip stop loss just above that candle, and then let's see. I'm not fully convinced on that idea, but let's see. I don't want to force a trade today, but let's see how this candle closes in the next 3.5 minutes. Yeah, if it closes like this, then this 2710.5 might be a good area to take a trade. About a 40 pip stop loss above the London high, and then anticipate price to come down here. I'll drop about 100 pips down. Right. Let's see if that happens. But M30 has to close. Yeah, M30 has to close bearish. 2 minutes more. 2.5 minutes more. Two 17597. 217. Yeah. I'm not going to do anything until the candle closes. I'm going to wait. As I said, M30 candles, and you just need to wait for M30 candles to close. Now there is, just because this candle closes, if you form M30 resistance, that doesn't mean price can't go above this high. It can. It's just we're stacking the probabilities in our favor. That we're not stacking certainty in our favor, right? Probabilities. So the probability is high when we form M30 resistance, the price can go down, and that's a safe stop loss above that London high. That means that London high grabbed enough liquidity from the liquidity candle to push price down. That's the idea that I shared. Got a minute. Let's see. I'll wait for the last 10 seconds. Then I'll know that it's closing bearish. But we might have a pullback. Well, maybe pull back too. Back here. Close 1040. Yeah. Okay. So M30 candle has closed. Bearish. Just 10 seconds left. Placed a pending order here around 2710, 2710.4, 2710.5. That's fine, that area. For a pullback, and maybe even an entry here. If he should come to create a top wick, he should come. So I'm going to watch the 1 minute time frame. We should come up to create a top wick. This candle went straight down without creating a top wick. So maybe it's going to come down, break the low, and then go back up to create a top wick. That's even better. If you break the low and then come back up, that's even better. But I've got a pending order there. Yeah, seems like we're coming down to break the low. Yeah, we did break the low. Perfect. All in the first 1 minute. Great. So now price is going to pull back up to create a top wick. Right? It happened all in the first minute. Went, broke the M30 low. See what it did? We created resistance. We came, broke the low. Right? And no top wick because it all happened in the first minute. Now price is going to pull back. It's got 30 minutes to pull back. It's got an entire 30 minutes left. We got 30 minutes of the candle of the 30. The candle just opened, so we got 29 minutes more. So let's see what happens in the 25 minutes. But price should pull back, create a top wick, and then likely head down. Technically, it should head down. But I've got a pending order up there. And on the pullback, I'll take another entry. And as I said, stop loss is going to be above that M15 candle high, right? That's a safer stop loss. The more aggressive stop loss is above 2712, right? That's the more aggressive one. The safer one is above the London high because price has tried to come. So the story is price has tried to come back up to the London high. It couldn't. It failed. It's rejected, and it's heading down. And a close below the London low means we're heading further down. Okay. But we're going to come up now. Before any of that happens, we're going to come up to create a top wick. That's when I'll take another trade. Yep. Oh, maybe a little too early. Anyway, that's fine. So if we come further up, I'll take one here as well. Yeah, 907. I've got to place a pending order here, place the pending order here. The reason I place the pending order here is there is a supply zone here on the 1 minute, a rally, 3 basin candles and a drop. And this is the fib level 2709. And the stop loss is above here, right? That's a safer stop loss. And TP is 2700. So this high is 1473. To 714, 73. Seventy-three, 93. Yeah. Rejected that area, didn't touch it, rejected. So 2700 to 700, 5 maybe. Yeah. What price point is this? 2703. Yeah, we tapped 2703. So which is fine. We should break this. 2699. Okay, so about 90 pips on the first entry, about 70, a little over 70 pips on the second entry, and stop loss is above that. Okay, and but I still have two pending orders here. This didn't get triggered. Price missed it by I think a few points, by a point, by 1 point. Yeah, no, by 4 points. Missed that entry by 4 points, right? Came rejected. That's why I took this other entry, because just missed it. We should head down. We should head down. Yeah, this is just, there is no bottom wick here, so we should break this low easily. Once we break this low, we should come straight down and break this low, and then maybe price is going to range here or pull back here, because this is where price created the London low. So those are orders there, right? We broke the low, just as I said. Once you break the low, we should come down. There should be a quick drop down to here. But this is where the London low was formed. So remember, there is liquidity. When price grabs, when there's a wick like this, price is grabbing liquidity to push up, right? To push up there, 70 pip, 75 pip move up. So there is liquidity right there. So is it going to react, push back up there, or are we going to swap those orders and go down? Let's see. We've broken the low, so should be heading to this candle, the wick of this candle. Also about 20 minutes for the 1 hour, 22 minutes for the 1 hour candle to close. So let's see how that could possibly close. So we've tapped this. This is a reaction. Okay, this is not a source. This is the source. You have a rally, you have a base. What we have drawn here to the left, to the right, that is the source. The rally, the 4 hour time, the 4 hour demand zone. That's marked here, 4 hour demand, right? So that's the source. Rally, that's a base and a rally. This is a reaction zone. A reaction demand zone to a 4 hour the 4 hour source zone, or the 4 hour original 4 hour demand zone. This is a reaction. And in that reaction, price came and reacted again. So 1, 2. This is the source. These are reactions, 2 reactions to that source. So the third time, is it going to react again and go up? Or is it going to break below this and continue down to 2700 or 2699 or even further down? Right? Let's wait and see. Da, 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 da. It's slow. It's going to be slow. I said this at the beginning. Price Once you get entries, price is going to take a long time, right, to get to those TP levels, because there is even see such a small move down, right, 40 pips or so to go down to get to that 2700, and it's taking time, right? Usually you have one candle, boom, straight down, right? You're going to see those moves happen starting next week. Maybe not right at next week, but during this year, you're going to start seeing moves like that happen. One candle, one 15-minute candle that'll hit your TP or your stop loss. Either way, price can go either way. If you're wrong, then it'll go hit your stop loss as fast as it hits your TP. So hopefully, the reason why we take low risk, high probability trades is that price hits the TPs more often than they hit our stop losses, right? And then when the trades automatically high RR trades, then your gains are going to be high. Your losses are going to automatically be smaller uh, than your wins, and your wins will automatically obviously be larger than your losses. So you'll be net gain or net positive, hopefully at the end of every month. And that's a problem with that is the issue with traders who have like a negative RR system, who don't believe in the concept of RR. That's fine. I've got no argument against those traders. That's absolutely fine. They can trade the way they want, and I'm sure those traders are successful. That kind of trading has never made sense to me. Like for example, having like a 50 pip stop loss or a 80 pip stop loss, and taking a 10 pip trade or a 15 pip trade. I I don't I can't wrap my head around that. But that's just because I'm a simple person. I don't maybe understand those concepts. But to me, having a small stop loss and a large TP makes sense. So then even if you have like a 50% win rate, or even a 40% win rate, or even a 30% win rate, you're still going to be um, you can still have net profit at the end of every month. Now, here's how I'm going to manage risk. Let's discuss that. That's as important as the entries and the stop loss. As important, or even more important, is how you manage risk on a trade once you get in on a trade, right? Do you just blindly wait for price to hit your stop loss? I don't. How I'm going to manage risk on this: if price comes up and breaks this high, I'm going to close some of my trades, right? Maybe these two trades at the bottom, I'm going to close them, maybe keep one of these open, and maybe even close three trades if you come up here and break this high. Because that means if you break the high, there wasn't enough liquidity to push price down, so we are coming back to that London high. And if we do come to that London candle, which is that candle right there, we come into that candle. See, we've come into it once. You can see we tapped it perfectly, right? This low, I said from the beginning, this candle is very important because it's a liquidity grab from the high liquidity candle. This low is 1196. So if you put a line there, 1196, 1196. That's a perfect tap, right? We tapped beautifully and dropped 69 pips. Okay, so if it comes back, if the liquidity wasn't enough this time and it comes back, then maybe it's going higher. And if it's going higher and it doesn't find enough liquidity in that candle, then it's probably going higher. So, and then it's going to hit my stop loss at just above 2715. So why hold the trade in drawdown when you know there is a higher probability of price going and hitting your stop loss? That's why you manage risk. That is why I set a rule for myself. I set certain trade risk management rules, certain risk management rules. Okay, and they're usually on the break of a M30 high or low, or M15 high or low. But there's a logical reason why I get to that. It's not just any M15 high or low break. There is a logical reason to it, and this is the logic that I just shared. this grab liquidity from that candle. So if price comes back and breaks that high, it's very likely it's coming deeper. So then that means I might even close everything, or I might just keep one trade open and close the other three. And that's how we manage risk, because this is a probability game. There's no certainties here. So if you manage risk like this, if you continue to apply the same logic in managing risk, just like you apply the same logic or the same rules of entering a trade, if you apply the same logic every time when you manage risk, then you will start seeing growth in your trading because your losses will automatically start becoming smaller and smaller, and your wins, your gains, your win trades or the trades that win will start being bigger. We've closed M15 bull candle. Okay, so now we got to watch out, because if there is a M30 support form here, it might be advisable to close one position, at least one, or if not both these positions, if we form M30 support here, because that means we're heading higher, right? That's what it means. So we got to wait and see. Let's wait and see. There's no need to rush. Just just got to wait and see if M30 support is going to form. We're ranging, nothing's happening. We're just, candles are printing side by side. This candle's a doji, which did nothing. This candle pushed back up. This candle pushed down. Next candle is a doji. Then the third candle pushed back up, right? So all it is doing is candles are printing next to each other, just side by side. We're neither going up nor are we going down. We're just printing side by side. Yeah. So it's a slow day. It's how long I've been here. Yeah, I'll be here as usual until the NYSE open. Let's see at that point how candles print on the chart. Depending on how candles print on the chart, I might give an idea or two. But as I said yesterday, don't don't try to force trades today, because next week you should have a lot more volume next week, right? So don't try to just force trades. If price comes here, I'm going to start managing, just like how I explained. If you close M30, I'm going to start managing risk on these entries, right? And that's it. And then I'm going to call it a day, because I don't want to obviously, you know, force any trades today or take more of a loss than I need to. So I'm going to manage risk on these trades soon as I see price going against me, because I hate holding drawdown. I absolutely hate it. Um, we price seems to be pushing up. To be honest, price seems to be pushing up. If you look at the 5-minute time frame, we're creating. We've just grabbed liquidity from uh, this area, this demand area, and we seem to be pushing up. So I'm still going to patiently wait for an M30 bull candle close, and then start to close trades. Until then, let's wait. Be patient. Price needs to break this low. For any chance of for price to head down to 2700, it has to break this low. Once this low is the 15-minute low, right? Yeah, this candle low. Because this candle has already tapped deep into this demand zone, right? Um, okay, so understand why I say this candle low, because this candle is the liquidity grab from this demand zone. The liquidity in this zone is already exhausted, right? Price has grabbed liquidity. We've come deep into it, right to the base of it, grab liquidity, and we've gone up. So once we break this low, there is nothing left in this zone. There's nothing left in this demand zone. This drop based rally, there's nothing left in it. So if there's nothing left in it, where is price going? To the next area of liquidity. So it needs to break this low. If it doesn't, then we're not going down. Then we're going higher. So it has to break this low. Once it breaks this low, we should come straight to 2700. Right now, it's not. It's struggling to break that low. Da, 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 da. Hmm. Nine minutes for the 30-minute candle to close. What you want to see is on the 30-minute time frame, price create lower lows and lower highs, right, to go down. So which means the 30-minute candle needs to close bearish. Sorry. If this closes bearish, that's a sign that that candle low is going to get broken, right? It's going to get broken if this closes bearish. It needs to close bearish because you want to see lower lows, lower highs. So we have a lower low, we have a lower high, and it needs to close. If it closes back up here, then the next candle is going to break this high. And what happens? Then that means we're not making lower lows and lower highs. We're starting to make on the smaller time frame, on the 15-minute or the 5-minute, we're making now higher highs and high lows. High highs and high lows means we're heading back up, right? On the M5 or the M15. Right? Does that make sense? So on the M30, you want to see this continuation of this move down. So you want to see a bearish candle close so that we confirm a lower low and a lower high, and the next one go down, break the low, break this low, and continue down. But there is a lot of time for that. 7 minutes left. So we could push up and close bullish. It's also got about 35 minutes to the NYSE open, so price might continue to range for a while. And maybe there is volume, maybe there is a little bit of volume in NYSE that comes in. Let's see. There wasn't yesterday, so let's see. Keep in mind what I said. Either we need to break this low to head down, or the M30 candle needs to close bearish bearish, and then the next candle will break this low. If the next if this candle closes here, the M30 candle closes here in the next 5 minutes, then the next candle will break this low and hit down. Or this candle has to break this low. If this candle breaks this low, then also we're heading down. One of those two scenarios for price to head down. Mm. It's got to break this low. Close is not good enough. It's got to break this low. The liquidity candle that grab liquidity, it's got to break that low. Because price can always come here and then push all the way back up. It's very possible. But it's got to break the low. Da, 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 da. Da, 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 da. Hmm. 2 minutes move, a 30-minute candle close. Let's see. Mm-hmm. Okay, 30 seconds. Let's see how the candle closes. Okay, so we're closing bearish. So creating lower lows and lower highs. The next one should break this low and we should continue down. The probability is now higher once this candle closes that we are heading further down because we have a 30-minute lower low and a lower high formed, and then the next one should break this low curve pretty comfortably. Yeah, almost there. Yeah. What's this low? 407, 423. No top wick. Wait, it's got to create a top wick before it heads down. Yeah, there you go. Broke that low, but it's going to come back up and create a top wick and then probably head down. So here's where I'm planning to get out, around 2700, just above 2700, 5 pips above 2700, and then maybe down at 2699 because there is support there. Yeah, there's support right at 2699, so price should tap it. That is that liquidity candle as well, the one that we are marked. So maybe we get a reaction there, and then price heads up. On the daily, we touch it, and we probably head up again, right? Remember what I said at the beginning, what could possibly happen when we did the daily analysis, when I went back to the daily chart and I said what could happen, right? Because price was about, what, 35 pips or 40 pips away from 2715. And I said that there are 8 to 9 hours left in the trading day. So price is not going to take 8 or 9 hours to get 35 or 40 pips, right? So price has to, there are orders that are coming in, there are orders that are going out. Price has to obviously trade until it's not going to just take 9 hours to make a 30 pip move. So I said that price can, if this candle has grabbed enough liquidity, then price is probably heading down, right? Remember everything that I said. So this is what I visualized. So this is what I want to see. So now let's see if it plays out. We don't know until price comes and hits my TP hits to 700. I don't know if that idea is going to play out, But you've got to learn to visualize things. Once you have all your information, then you make then you visualize something and you make a calculated decision on what might happen, predict price, and then if that happens, if you start seeing things play out that might, bring your prediction, I mean, that it might come true, the prediction might come true, then you take a trade, right? And that's how you learn. And if you're wrong, then you on the weekends when you do your when you go over your trades on the weekend, it's very important to go. I still go over my trades on the weekend, right? So I go back on the weekends and I watch my 5 streams. If I stream on Monday to Friday, then I watch the 5 streams. I watch the first 30 minutes when I do my analysis, and then I watch the last kind of 30 minutes, because that's when I take a trade or I give out trade ideas. So I go watch the first 30 minutes and the last 30 minutes, right? To see, okay, if I had a losing trade, what did I do wrong? Could I have done something to avoid that loss? And if I had a winning trade, what did I do right? Did I do everything right according to my plan or my strategy or my playbook? Or could I have done something better? If I did everything right, then how can I replicate that the next time that same thing happens? How can I replicate it? You got to do that. I do that. I've been doing that for years. The weekend, and it doesn't take long, because it's just like 5 trades to look at, 5 maybe 6 trades if I take 2 trades on a day. Sometimes I just have like 3 trades to look at, 3 to 4 trades to look at. Yesterday I didn't take anything, so there's nothing. This week I took 2 trades on Wednesday, 1 on Tuesday. I think that's it. One on Tuesday, two on Wednesday. So that's 3 trades, and then there's this. So if this turns out to be a loss, then that's it. So that's just 4 trades for the week. And I'll look at these 4 trades on Saturday. I don't remember if I took a trade on Monday. I can't remember if I did or not. But I'll have to go back and look at it, the stream, and see if I took a trade on Monday or not. We're still struggling to break this, the London low. We're still struggling. Yeah, now this is 20 minutes to NYSE open, right? 24 minutes, roughly about 24 minutes. So this is when price starts to range. We start to range, and things get very slow until NYSE open, and then maybe after NYSE open, volume comes in. Maybe 30 minutes after NYSE open, volume comes in. So we're gonna have to wait. I'm gonna go to take a break for a second. I'll be back in a bit because it's just basically waiting now. The trades I've placed my stop loss there. Uh, as I said, an M30 candle needs to close back for me to start managing risk, or if price comes and breaks this high, then obviously I'm going to close my trades if you break this high, right? Otherwise, I'm going to wait for M30 support to form here to manage risk. Okay, this is what this was the original idea. This was what I had said initially. So we got about 23 minutes for the 30-minute candle to close. So okay, I'll be back in a few minutes because it might take a while for price to come down, even though it's a very small move down, just a 30 pip drop left. It might take time because there is no volume today. All right, I'll be back in a bit. Yeah, so we're pushing up again, just no volume. So basically, just got a couple of, just a minute and a half for the 15-minute candle to close. If we, yeah, I'm going to manage risk on the 30-minute candle, just like I said. So I'm going to wait for 30-minute support to form, then probably close all the trades, and then also call it a day. Honestly, there is nothing. Okay, in terms of trade ideas, okay, I'm going to be here for another 10 minutes, 10 minutes, maybe 10 minutes, 15 minutes at the most, okay, until NYSE open. So here's, uh, I would honestly suggest not to trade today, but here's a trade idea, and we're going to come on Monday and see if this trade idea worked out or not, okay, and how accurately it worked out. Buys, okay, for scenario buys. Price is dropping down. We are pushing down. We're creating the New York session has created a low, but not a new low. We're just retesting this London low. So once it needs to create it needs to break this low. Once it breaks this low, we should come down. And then if we form M30 support, because the reason for that is on the high time frame we're still bullish. We're still bullish on the high time. That is why I'm favoring buys. Even though it's a Friday, I'm favoring buys because on the high time frame, on the daily and the 4 hour, on the daily, not on the 4 hour, on the daily, we are still bullish. On the 4 hour, we are pushing down, right? So buys would be from around here. So wait for price to come down, create M30 support. If it grabs enough liquidity here and creates M30 support inside this, then look to take a trade for price to come back up. Safer stop loss would be under this M30 candle here, under this M30 candle, and for price to come up. And your TP levels would be back. It would be at yeah, your TP levels would be just under this supply zone, right? So maybe around 2712, and then further TP at 2715, right? So to 2712, 2715, right? That's the buy scenario. Buys from here, not from in the not in the middle here, from here. Okay, so M30 support to form at the high liquidity candle or 2700. There's a BR in there as well. So there are two liquidity areas that price can grab liquidity from, 2700 or the liquidity candle, and then to push up. For sells, two scenarios for sells, right? For buys, just one scenario. For sells, two scenarios. If price comes down and then pulls back up, because then price is creating a new low. If in the New York session, it's creating a new low, right? If price comes down here, it's created a new low. Wait for price to pull back up, create M30 resistance, and then a trade to retest this new low that it's created, right? For price to come back and retest the low, but M30 resistance to form. So maybe somewhere here or further up here, M30 resistance to form, and then come for a trade to come back and retest the low. That's the first sell scenario. The second sell scenario is price comes back above the Asian high, we break above the Asian high and closes back an M30 resistance candle here, right, from this high liquidity candle right here. If you break the Asian high and an M30 resistance candle closes in this area, anywhere inside this liquidity candle, look to take a sell for price to come down back again to the London low. That will be your first TP area, so would be around 2703 would be your first TP area, and your second TP area would be 2700 or 2699 or deeper inside here, right? That is the second. Your stop loss would be above, the safer stop loss would be above the liquidity candle high. The more aggressive stop loss would be at the high of that M30 resistance candle, right? So two sell scenario, I gave out two sell scenarios, what to look for to take in the instance of price, if you want to take sells two scenarios for sells, and then one scenario for buys, right? With with where exactly the stop loss should be for both of them, and in both scenarios, and also where your TP should be. Okay, so that's what to look for the next 3 hours. So from NYSE open, so NYSE opens at 9:30 a.m. EST. So from 9:30 a.m. right until 12:30, right? In the next 3 hours, from 9:30 a.m. EST to 12:30 p.m. EST, what to look for? Either one of those three scenarios: one buy scenario and two sell scenarios, right? If I was trading, that's exactly what I'd be waiting to see, looking for, right? And then that's the idea. That's the visualization of the idea. Then you need to see candles close to confirm either one of those three ideas. Candles close. So M30. So I said M30, right? Because we're ranging. Now, if we were trending, I would have said in some situations you can wait for, if you're buying, if you're trending up, then you can wait for M15 support to form. If you're trending down, you can wait for M15 resistance to form. But we're ranging right now. We're just flatlining. Look at the EMAs. They're both going parallel, right? They're just parallel to each other, right? They're just parallel, just moving along, right? Just they're flatlining. So we're just in a range. Nothing's happening right now. So price, we need to wait for M30 confirmations, not just M15. Okay. So that's my rant for the end of the stream. Yeah, I'll be here for maybe 5 minutes more. 5 minutes more, and then that'll be the end of the week, and we're back again next week. Exciting week next week. Exciting week. Exciting, man, by the grace of God, exciting year ahead in terms of volume this year. Trump gets into office. I remember 2016, 17, 18. Phenomenal. Um, Volume for gold. Okay, I'm just talking about volume. I'm not talking politics here. I'm not talking politics. I'm talking about volume for gold. Um, so exciting. Yeah, exciting month, a year. The next few years is going to be very exciting. Mm. Mm-hmm. Yeah, nothing really. Nothing's happening. We're just ranging. It's just nothing. Just basically just horse manure right now. Is we're moving down. We're moving back up. We're coming down again. Again, we're rejecting. We're moving back up. We're just ranging. There's really nothing in the market right now. Hmm. Sorry. Yeah, it's just nothing happening yet. Hmm. It's just so little volume that it's struggling to break uh, this little bit of 10 pip, 11 pip zone of liquidity below that liquidity grab. That's how little volume there is. Right? So when you see something like this, when you see price struggling, then that's just an indication of what you should or should not do for the rest of the day, right? It's just a sign. I mean, yeah, it's just a sign of what you should do or should not do for the rest of the day. Um, all right, so I'm gonna call it a day in a couple of minutes. I will just leave my stop loss there, TP is there, and let's see what happens. Um, yeah, just just nothing, just nothing. I don't think there is gonna be enough liquidity for price. I mean, enough volume. Sorry, volume, not liquidity. Is enough volume for price to push up. Even if it needs to get back up and hit my stop loss, I don't think there's going to be enough volume for price to push up 105 pips. Um, because it's taken so long to drop here. I don't know if it has enough volume to go all the way up another 110 pips. Okay, so NYSE open in a couple of minutes. See how this candle close, and then I will call it. I'll end the stream. So I'll be back. So I'll be back Monday, 7:30 a.m. EST, as usual. By the grace of God, we'll do our prep work, 7:30 a.m. EST, and be ready for uh, 8 a.m. But 12 noon EST is the inauguration, so maybe not want to take any trades. Maybe use Monday also as just an educational session, and not try to take any trades on Monday because we might be ranging for the first couple of hours of the New York session until it gets closer to the inauguration, right? So, is Monday a holiday? Oh, good, good question. Good. Next week, is it? Is Monday? Yes, Monday. Sorry, Monday is a bank holiday. So I just realized that Monday is a bank holiday because of the inauguration. So um, it's no, not because the inauguration, it's because it's Martin Luther King Day, and that coincides with the inauguration. So it's not because of the inauguration, but because it's Martin Luther King Day. And I had read this uh, in the morning when I was reading the week's news, and I completely forgot about this. I was thinking I should mention it. So Monday is a holiday, so there is no trading on Monday. I will not be here on Monday. No analysis on Monday at all. So there's Monday. If it's a U.S. bank holiday, I don't bother opening the charts, right? It's as simple as that. So I'll not be here on Monday. So we'll be here on Tuesday, right? Okay, so the M30 candle is closing bullish. So I am closing my trades. Um, we might be heading up, will we? Created resistance right there. Maybe I'm going to hold this. Maybe I'll wait. Let's see. If it breaks the low, then it's likely, even though we form support here, we might continue to come down. But it needs to break the low. Okay. So anyway, let's see. If price comes and breaks the high, breaks this M30 candle high, then I'll close these two trades. Maybe keep one of them open. Close this pending order. Close these two open orders, and have that one pending order open. If you break this high, if you break this M30 high, right? That's how I'm going to manage risk. Otherwise, I'm going to just hold. If it doesn't break the high, then I'm going to leave it. Let's see if it breaks this low, the London low, then we should come down. Okay. All right. So see you guys on Tuesday, not Monday. Sorry. I'll see you guys on Tuesday. All right. Take care. Have a great weekend. See you on Tuesday.